Hello, this is Michael Salmony, and I'm welcoming you to another episode where we talk to interesting people around open banking and fintech and payments. And today I'm thrilled to have Harish from the World Bank. It's always super exciting to do things with the World Bank. They've taken me to very exotic places, Azerbaijan and Philippines and Indonesia and everything. And they also have a different angle on the open banking topic than we usually see in Europe and the West. For example, around inclusion. Harish, could you tell us a little bit about this angle?
Right. Thank you, Michael, and good to be with you. We see open banking and open finance introducing new business models, new approaches to provision of financial services, and that we see bringing in more competition, improving efficiency, lowering the cost of providing as well as accessing financial services. So let me illustrate that with a couple of examples. So with open finance, you are able to initiate third-party payments. So in the sense, like you can initiate a payment from any application, subject to, of course, all the compliance with the regulatory frameworks and customer consent and so on. So this opens up the possibility for the customer to use products which they're more familiar with, interfaces they're more familiar with, and then also where they're able to initiate payments much more easily. It also blends itself well with the developments in fast payments and QR code payments and so on. So it all integrates very well. So it expands the opportunity for individuals to make payments in a more familiar context, as well as for merchants to accept payments on QR codes and so on. So that's one example. The second example could be related to the ability to aggregate information from various accounts you currently hold across the financial sector, and be able to identify opportunities for more savings, be able to better optimize your credit utilization. So that is the second area. The third area could also be when you're looking for a new product, you are able to avail services which will compare services for you. And if it is combined with some advisory services, it could actually be able to guide you towards the right product mix. So these are a couple of examples. I think I can go a little bit more. It could also empower some of the kind of financial institutions which are more focused towards certain customer segments to be able to offer a wider bouquet of services to them in partnership with other, not in partnership, using the open banking services, using the banking as a service model and other things like that. So it enables, it kind of improves the offering of some of the smaller financial institutions who are perhaps better positioned to serve certain customer segments. So those are a few of the points I wanted to make.
Okay, those are points well taken, but I think you will find those also in Europe and the US and in the West. The thing I'd be particularly interested to hear from you is how are things different in other regions of the world where the World Bank is super active, especially, for example, inclusion, which is maybe not such a hot topic, or in India where things are going in a different way. Can you share a bit about that?
Right. I think the point in emerging markets is of course financial inclusion is a global problem, and of course the incidence or the percentage of people who are not financially included might be differing, but certainly it is a global problem. But specifically coming to emerging markets, I think there are certain types of products and user interfaces which have been very important to further financial inclusion. So, for example, the agent networks is a big driver of financial inclusion growth in many emerging markets. And with open finance, you can provide a range of services through the agent networks. You can also foster interoperability at the agent network using open finance. So I think that is one area where it is different from the way it could play out in advanced economies.
Could you
And
just
then I
give an
think,
example of that, maybe? I mean, how
yeah.
concretely does somebody in Asia benefit from open banking and get them more into the financial system using open banking?
Right. I think open finance doesn't necessarily get somebody into the financial sector. I think it is more related to once they are able to get in, then how are they able to use it to kind of make it more useful for them, and in that sense, connecting them better with their financial services and products. So I think that is the angle to look at. Of course, one can argue that using open finance, you might be able to simplify the customer account opening process, but that assumes that the person is already in the financial sector and is perhaps going for a different type of financial service for which they can do the customer due diligence based on the information which is available with the provider you already have. But that is that is related to somebody getting better services. But I think the core point is that open finance is more about making the services they already have more useful for them, and for them to give the users more control in deciding which services they want to use, giving them better information, and so on. So I think that's the way to look at it.
Well, that's
And
a
I was
interesting and slightly different angle to what some people maybe be expecting. Some people think inclusion is all about getting people included, getting them newly on board in financial services. You're saying that's not so much the point, although there are players like Modulloop, for example, who do that, try to get people newly in. But you say the emphasis more on getting them better serviced and getting them onboarded more easily and using more services than they would without. Is that roughly right?
That is roughly right, but I think the point is that, of course, to get somebody to open an account, of course there are issues related to customer due diligence, so the use of digital ID, for example. There are also issues related to who can open an account. So to bringing in new providers like mobile money providers, small banks, and other kind of institutions, and then combining it with agent distribution models so kind of the locations where you can open an account. These three come together to allow a person to come on board. But once a person comes on board, the utility of the service is what is in question. And the point I'm making is that once a person comes in, the institution which is offering the service to the individual is now able to tap into a wide variety of services, not just what they're limited to, what they are able to provide. And it is also a customer's prerogative at that point to be able to use the services of any other providers by virtue of having access. So I think that's the point.
Okay. No, that makes a lot of sense. I mean, especially this angle with the mobile money providers, that's not such a hot topic in Europe and the US, but in some other regions, that, of course, is absolutely core. And connecting that to these new developments is super interesting.
Yeah.
And I think you mentioned with India, right, who have this amazing UPI and they have a different way of doing consent. Can you tell us a little bit about that? How that is maybe also going a bit of a different way to the things we usually see in the West?
Yes, no, I think the distinction in the India model is, I think in Europe, which was pretty much prototypical of what other countries followed or drew inspiration from, it is about licensing a third party who can provide services to you as an individual, and obligating banks and other financial service providers to provide information, based on customer consent. And then after that, there is no specific infrastructure. Of course, there are all the directory services and digital certificates, etc., which are used to kind of assert that you are licensed and you have the customer consent and so on. In the case of India, in one stroke, actually, the Indian regulators brought in all the different types of financial services. So they did not start with open banking and so on. So it went with open finance. It also brought in some of the government services, like in particular on the taxation side, the value-added goods and services tax. So though that part was also brought into the mix, right? So you had banks, mutual funds, insurance companies, and basically all the financial services. And then the model is that they're not licensing an entity or authorizing an entity who can provide open banking or open finance services. Rather, they are licensing intermediaries who can facilitate collation of information and transmission to whichever financial service provider you want to use. So the end use is not defined. That is already defined in the existing regulation. So in that sense, you're not getting into that area at all and leaving it to how the financial services evolve. And you're bringing in multiple players, and you're introducing an intermediary whose role is to basically orchestrate this. And there are multiple such entities which have been licensed. So in that sense, there is also an element of competition there. And then also, I think the underlying protocols and everything which underpin it, those are developed in a way that it could potentially be extensible to bring in other sectoral information as well into the mix. So I think that is also a very important element.
I love this with the intermediaries. I mean, usually in most other financial services, the intermediaries are more or less a necessary evil to make things work. Yeah. But in the Indian model, as I have understood it, they're actually a core element, and they actually get consent. They're incentivized to get users in. They're incentivized to offer them new services. It's a much more open and user-controlled way than I think we sometimes do it. Consent isn't sort of some hurdle you have to get through. It's actually something you want to do and you're encouraged to do because you get new value from it. So thank you very much, Harish. This has been super interesting. You've shown us lots of different angles which we don't usually see from the Western players, both on inclusion and specifically in the Indian market with its various very different aspects. Been super enlightening. Thank you very much for your time.
Thank you. Thanks. It was a pleasure. Thank you.
Thank you.